afternoon. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, we're going to get you updated on what's happening around the business world. Obviously, the markets were closed yesterday for Veterans Day, or not much happening around the world of business. Of course, Monday, big news over the weekend. Government shutdown could be coming to an end. We'll have the updates on all of that for you. Big rally in the markets on Monday as well, coming back from that news over the weekend. And we had a couple days off here, one a personal day on Monday, then the holiday yesterday. Excited to be back into it. Let's get into it with that Market Watch. And we're just awaiting the House vote to reopen the government. That should come later today. In the markets are responding happily here today, again, after that Monday rally. The Dow Jones right now up 387 points to 48,335. The S&P 500's up 6 points to 6856 for the S&P 500. The Nasdaq is the one that is still down today. It was a lot of things were down earlier. They've all kind of flipped. Nasdaq, the only one pretty much that has not. 104 points down right now for the Nasdaq, 23,363 for that tech-heavy index. And then you got the Russell 2K, that the small cap index out there. I had to catch my breath there for a second. 4 points up for the Russell 2K, 2461 is where we're at right now. And then Bitcoin, it's back down 101,000 range, 101,838 for Bitcoin here today. It's technically down on the day, and obviously just been hovering since last week at that low 100,000 level for Bitcoin over the last week or so. So good news in terms of the markets and what people are talking about out there. Stocks we're paying attention to right now. Let's look at Advanced Micro Devices first up. That's a chip maker. As you know, if you follow this program, we talk about AMD a lot here. They're up big today, right? 7.48% here so far today. And so the markets are reacting to a robust long-term growth target that they made. Their CEO made these long-term growth targets at the Financial Analyst Day earlier today as well. They even did an internal forecast that the company's data center revenue is going to jump 60% annually in the next 3 to 5 years. So AMD has a very rosy outlook coming up for their chips. For what they do there, AMD does, and that's why their stock is up 7.52% here today. At one point today, it was up 10% as well. Like I said, just those strong growth predictions. And their CEO actually in that investment days thing that they were at today, she actually called AI spending, quote, the right gamble as well, unquote, for AMD. Of course, NVIDIA is also in that space and calling that the right gamble as well. Then we got a company called Bill Holdings out there. Well, Bloomberg came out earlier. They reported today that the financial operations firm is considering a potential sale to either a larger industry rival or to a private equity firm out there. So that news there pushes a Bill's stock price up here. It's up 12 percentage points here today to $52.17 for Bill Holdings. And then On Holdings, they're the Swiss athletic shoemaker. You make all those Swiss shoes. We've talked about them, time and time again. Look at this, 18% up here. Y'all are buying their shoes. But remember, this is the company that's getting sued for their squeaky shoes. We had that story a few weeks ago. But they did raise its forward guidance for a third straight quarter, and they beat revenue and earnings estimates in that quarter as well for their reporting. They also said that they wouldn't need to lean on Black Friday promotions to boost demands, which means no low margins, right? Anytime you do Black Friday promotions, your margins go down. You may sell a lot more, but margins are lower. By not having to fall into that helps On out, definitely on the margin side of things for On Holdings and their shoe company. That's doing really well right now, 18% up here today for them. Later on, when we come back and look at some stocks, we're going to look at some companies. Well, one, Clearwater Analytics, not one we've looked at here on the show before. But we're going to look at Circle Internet. Remember, they were the darling of the internet when they had their IPO earlier this year. We'll look back at them. And then Sony, right? Gaming, movie company, software company. We'll look at Sony as well and see what their stock is doing. Tariff burden is kind of the news there for Sony as well. And we'll We'll get into all that coming up. But since we've been gone, a lot's happened around the government shutdown, right? We are awaiting the House vote. I did see they're expecting the vote to happen. Everybody's got to get back into town. And we're going to have an airline update here on what to expect when the government does reopen. So it does take some time for it get everybody back to Washington on the House side. And I saw here the House to vote on the bill to end the shutdown will be around 7 p.m. Eastern time, is what they've announced now. So that'll be 5 p.m. our time here in Arizona, is what we're looking at on if it's a go here this quickly or if there's going to be a delay in opening the government. And if you don't know the stories here, you've been busy with Veterans Day and the weekend. On Monday, the Senate did pass that legislation that's going to reopen the federal government. And it's also going to do things like back pay, replenish the SNAP funds, etc. So that vote now is on the House side. Then it goes to the president's desk as soon as the House does approve that as well. It's pretty much a certainty the House is going to do it. But in this day and age, political age, I don't know. Hold your breath here to see if what can happen out there. Maybe not everybody gets back on the Republican side. Maybe somebody, filibusters that put some other stuff in there they have to argue about. So it's something to watch here when it does happen. The vote does happen later on today. But even when it's signed today, it's unclear when the SNAP benefits and the payments might resume when the government does reopen. Well, our next story will be about air traffic control. When will that go back to quote unquote normal? So stay tuned for that as well. And here's interesting SNAP recipients, SNAP benefits numbers here for the recipients. In 2024, SNAP recipients redeemed a little more than $96 billion in benefits. This is all according to the U.S. Department of Agriculture, who does handle that the SNAP benefits. The majority, 74%, they were spent at the big stores out there, right? The superstores, supermarkets. That would be Kroger, Walmart, etc. But some independent stores, there's some out there that did benefit big as well, right? 74% mega stores. That leaves that other percentage point, 26% roughly, to go to the small independent stores, all being hurt without the SNAP benefits being paid out. 14% was spent at those smaller grocery and convenience stores. And, those usually smaller stores, convenience stores. Obviously, they're smaller. They're sit on corners, but they're also in neighborhoods. They're your local store, mom and pop type stores that we're talking about here as well. So, and if you're on SNAP, you can easily get to those stores in the neighborhood as opposed to the large grocery stores like Walmart's and things to that effect. So they're hurting without those numbers. I saw Walmart. They didn't come out and talk to anybody about it. I scoured the internet to see if they had any comment for anybody. They did not. But their grocery sales are down after the SNAP benefits have been canceled. And we had that story last week as well out there. And what does that mean so we know SNAP's being refunded. We don't know when the payments are going to restart. That'll help some grocery stores and some independent stores out there, as well as people being able to get their food and everything. But, what will happen with the airlines when the government reopens as well? Because so far, the airlines have actually canceled more than 9,000 flights across the U.S. Since they cut the flights just last week to ease the demand on the air traffic control towers. So we know those are short-staffed, and we know people are leaving the positions, calling in sick, etc., since they're not getting paychecks out there as well during the shutdown. So when it reopens, airport disruptions, flight cancellations, and even the economic losses, they're not going to disappear really quick. There's not going to be an instant recovery. It's going to take days, maybe weeks to ramp back up here. Another 1,200 domestic flights were canceled yesterday, Tuesday. That's when the FAA increased its target for cutting flights at the busiest airports. It was 4% starting on Friday. It's up to 6% now as well. There were fewer cancellations yesterday than in recent days. Well, Transportation Secretary Sean Duffy actually said that more air traffic controllers are returning to work after news of a shutdown agreement. So no longer calling in sick. Cancellation and delays, well, they piled up due to ripple effects from flight cuts. Even the severe weather, big snowstorm rolled through part of the country last weekend. Secretary Duffy did reinforce yesterday that the cuts will remain, even if the shutdown does end tonight, until safety metrics improve and staffing levels stabilize at air traffic control facilities. The cuts are set to rise to 10% coming up on this Friday. So it goes from 4 Friday, 6 yesterday, 10 this Friday as well. So we know the flight restrictions upended airline operations and pretty quickly, as a matter of fact, within a day or so. Many planes were rerouted and they aren't where they're supposed to be. So it'll take some time to get those planes where they need to be to get their services back up. Just because they add a flight again, right? They cut back, let's say, a flight from here to Vegas. Well, they can't just start that flight again. That plane, wherever it's sitting right now, needs to get here in order to take those people. So there will be a ramp up here coming up, not just in the SNAP benefits, also on the airline side of things. So if you have a flight coming up, thinking about traveling for Thanksgiving, or you haven't pulled the trigger on it yet, well, it's not all over as we go into that. And, we've had a lot of stories lately about layoffs, and we have a couple of those coming up here as well. But I want to do a little happiness here as well. Next time you go into Target, well, the new staff might be a little friendly with you out there because Target does have that new staff policy that they announced. Yes, this new policy, it requires employees who are within 10 feet of customers. Well, they now have to smile, make eye contact, wave, and use friendly, approachable, and welcoming body language to you as a consumer. Its staff members, if they're within 4 feet of you, well, they must personally greet you. They must smile, initiate a warm, helpful interaction. The requirements are part of a new program Target's rolling out called 10-4. The program is one way Target's trying to alleviate the elevate the shopping experience for you there. I don't mind if they're just like, hey, how you doing? Can I help you out? That's fine. If they're like, hey, how's your day? Where are you going after this? What can I help you find? That gets crossing the line. And I'm talking about you, Wells Fargo, specifically banks, right? When they cross the line on that, Starbucks, for instance. The company did not say when the policy will go into effect or even whether employees will be reprimanded if they don't abide by the policy and just continue to ignore you as you shop through the store. No answer on that, but could be more friendly there at Target coming up. Like I said, I don't have a problem. Like when they wave at me and I don't wave back, am I now the a-hole? Pressure's on when you go to Target coming up, folks. There, but look, Target's trying this turnaround. It's one way to do it. Friendly staff does not hurt. Like I said, as long as they don't get into the other side of it, don't be asking me what I'm doing after this, and like nobody cares what my plans for the weekends are. I don't even care about my plans for the weekends. Why do you? Yeesh. Hey, also with government side tariffs, etc. Right, the auto industry has been struggling with the tariffs when they have parts go from Mexico into the U.S. and into of course Canada, the U.S. But even a lot of its suppliers are getting those parts from China, for instance, right? Well, word is out there now that General Motors, they've directed several thousands of its suppliers to scrub their supply chains. Basically, no parts from China coming up as well. So this is obviously a look into GM's growing frustration over all of the disruptions over politics and geopolitical stuff out there to their specific operations. GM executives have been telling suppliers they should find alternatives to China for those raw materials and parts. The goal was to eventually move their supply chains out of China completely at some point. They actually had set a 2027 deadline for some suppliers to dissolve the China sourcing ties, as what they're looking at. China did approach some suppliers with a directive in late 2024, but the effort took on fresh urgency, major urgency, this past spring, obviously during that first part of the Liberation Day of tariffs there in April 1st, and how that's escalated over the last several months as well. GM executives, for their part, they did say it has a broader strategy to improve GM supply chain resiliency for them. So the it is well, it would obviously save parts and things to that effect, and but I just don't understand. I know it's cheap, but then you ship it back and forth. My brain just doesn't wrap around how much cheaper it is to get it done over there, even with all the transfer costs, etc., that you're dealing with. So GM asking their people to rethink those ties to China, and and China's been a long, important source of parts and raw materials for the automobile industry and just their parts alone. Even if something comes from Mexico, Doesn't mean it came from Mexico originally, right? They ship it in and then they add on to it or whatever to put the car together. So GM making those announcements and moves out there. And, let's talk a little bit about layoffs. I know it's, first show back. Why are we going so negative for, Steve? Well, if you're a friend of Frosty's out there, pay attention. Yeah, Wendy's, they plan to close hundreds of its U.S. stores next year. This is all part of that big effort they have to revive its domestic businesses. Well, it's because they've been under pressure from slowing sales, like everybody else in the industry, for a couple years now. Their interim CEO, his name's Ken Cook, he said during the company's earnings call last week that a mid-single digit percentage of its 6,011 U.S. restaurants are expected to close next year. So, if you want to break down that math, I didn't do it. Fox Business did it for me. A mid-single digit percentage is about 4 to 6%. So, the number of closures would be about 241 Wendy's stores out there. This comes as Wendy's executives said its business and sales do remain under pressure and that it's acting with urgency to return sales at its U.S. stores to growth. This is the interesting strategy here, right? McDonald's is trying to add new restaurants still, etc., and grow, and trying to grow those existing sales with those discounts. Well, Wendy's taking a little bit different of approach here. In its latest fiscal quarter, this is where this conversation had with the interim CEO. Well, global sales were down 2.6%, but then sales at U.S. locations actually fell 4.7% for Wendy's. The company blamed the big drop there in U.S. sales largely on fewer customer visits, but it was also offset by higher spending per order because obviously price increases out there. So less customers, but customers were spending more at Wendy's here over the last quarter. But rather than adding new stores and trying to get growth that way, Wendy's is trying to focus on increasing sales at each of its U.S. locations. Well, they have a bunch of strategies to do this, but Wendy's did launch Project Fresh out there, is what they're calling it. It's a major plan. It's designed to improve performance, boost its profits, and ensure viability here of their existing stores. So, we hear all the time about, McDonald's trying to keep adding, keep adding, keep adding. Uh, Wendy's is like, we're going to cut back. We're going to make our existing stores more profitable, more valuable before we do any growth from that side. So interesting take here from it, quite frankly, a struggling industry with that discretionary spending from us consumers out there. And so we have stores closing there on Wendy's side. Obviously, jobs will be cut at that point. And then we got some more jobs being cut as well. And David Ellison, he's the CEO there of, very big media company that bought Paramount. Well, he marked his 96th day of being in charge of Paramount, and he disclosed several things here. But he did also disclose an upbeat financial output for next year and also plan to reduce an additional 1,600 workers. Paramount has done a lot of layoffs here since the Skydance, Larry Ellison's company, Skydance, purchased Paramount earlier this year. So his conference call with analysts was on Monday, and it was the first time that Larry Ellison actually addressed Wall Street since the merger of the two companies did go down. And that was the merger actually finalized there in August of this year. One of the top priorities, he said, will be to reverse decades of underinvestment in programming. So that means Paramount plans to increase content spending by $1.5 billion next year. So that's basically doubling the number of movies that it releases as one of the strategies to do that. The Melrose Avenue studio intends to boost output from 8 releases. They want to go all the way up to 15 that are planned for next year. Investing in technologies is another big priority for Larry Ellison and the companies. And executives, they want to build streaming service. Paramount Plus as the economics crumble for Paramount's once profitable cable television division. Paramount owns Nickelodeon, MTV, Comedy Central. Those have all suffered big over the last several years as well. And then you can get into CBS stations, CBS Broadcast Network, and their struggles as well for them. So they had big numbers. He reported big numbers for Paramount Skydance, but also said this is kind of where we're going. The other thing that they did, unfortunately, right, don't forget they got the UFC joining them next year. And they announced they're hiking pricing here on their streaming subscription fees. Of course they are. Everybody is doing that. Paramount Plus plans are now offered at $7.99 a month and $12.99 per month. Yes. They did not announce what the dollar amounts are going to. They just said there will be price increases coming up as well. Obviously, their goal is to turn the streaming operations profitable coming up this year. Like I said, the UFC is coming on board. No more pay-per-views. Isn't going to cost extra. So, you're going to get more viewers from that perspective, but price hike is coming. Paramount said that workforce reduction of 1,600 people that they're talking about, well, it stemmed from the company's divestiture late last month and the television stations in Chile and Argentina. So obviously nothing up here in the States for the most part. It's just getting rid of those stations. But they have done several layoffs here with, obviously similar things happening between the two companies. So Wendy's closing stores, Paramount Skydance getting a little bit thinner as well, and big growth opportunities for them or big dreams coming up for them as well as we get into that. And when we come back here at McCollum on Business, we'll get into a couple local stories and a toss of Italian pasta fans. You want to stay tuned. Our last story of the day, little concerning, either the pricing of Italian pasta or just will you be able to get it at all? We'll tell you about that coming up after our local stories around the utilities here in the Valley, specifically APS and then SRP and Central Arizona Project as well in terms of water. So come on back with us on that, folks. It's McCollum on Business. And we're back here at McCollum on Business, Wednesday edition. Of course, we had Monday off for a personal day for me and a Veterans Day parade to go to for my ROTC son there and everything. Great time on that. Took the day off. And then, of course, yesterday being Veterans Day, we did the main event, of course, live 8 to 10 a.m. That's been live all week long with an angry fan coming in and filling in for me on Monday as well. Those are up on demand here at Robat TV right now. Of course, live 8 to 10 a.m. here at Robat TV, and then you can find it on the YouTube, free YouTube channel out there for the shows that we produce here as well, and then free podcast systems as well. Just search at TME Sports Show, and it comes right up for you. Like and subscribe to the free channels as well, and appreciate everything you guys do for us on that. This show's live 11 o'clock when markets are open. Of course, here at Robat TV, afterwards, we get it up on demand at Robat TV, and then, of course, on the YouTube page as well for you. No podcast for this show out there. Pit Stop is in hiatus until February when the market goes. Follow me at the Pit Stop Talk in terms of the racing stuff for that show. Now I'll have a social media post as we're getting ready and dialing up for that 2311 Front Row Motorsports lawsuit coming up here. We'll do some shows as news breaks and break it down. I'll probably do it after that lawsuit court date and stuff like that. So you'll find that here, obviously, Robat TV, the free YouTube page, and search at the Pit Stop Talk as well on your favorite podcasting system. You'll find that podcast out there. And then, of course, you saw the commercial there for the Real Matrix. Today is Wednesday, which means 11 o'clock. I apologize. Noon, Wednesdays at noons, new episodes of The Real Matrix do come out. It's already up here at Robad TV. I put it up early this morning for you. Get a head start for those of you that subscribe here at Robad TV. Of course, free YouTube channel as well. On that YouTube page, free podcast. Just search The Real Matrix on all your favorite podcasting systems. You will see that as well for The Angry Patriot takes you through and opens your eyes to the world out there and what he says we're living in, the real Matrix out there. It's an entertaining show. If you're into that type of news and reporting, well, they got it all there for you. And storytelling, they got it there for you there, the Angry Patriot. Sometimes Dale Hillestra's on the show. He's got other guests as well. It's just a fun show to have here and produce. It gives you a different perspective. And please check that out on the free YouTube page, free podcast system, right here at Robot TV as well for you. And with all that being said, let's get right back into that Market Watch. Obviously, the market with the shutdown going to supposedly end this afternoon, our time, this early evening. Markets have responded well. Even the Nasdaq's getting better as the day goes on, although it is still negative. The Dow Jones is up 362 points right now. S&P 500's up 4 points. The Nasdaq, well, it's down that 69 points, but it's getting closer and closer to zero as the day goes on. Russell 2K, well, doing the opposite, getting closer to even. It's 0.5 points up right now for the small cap index. And then Bitcoin, 101,582 for it. First stock we're going to look at in this segment, Clearwater Analytics is the stock we're going to pay attention to. You know, I probably haven't heard of this company or anything, but they are a cloud-native platform company. Well, why did they catch my eye today as I was just getting caught up on? I haven't paid anything attention to the stocks and companies last couple of days. Why we've been off, but Clearwater Analytics up this 8.83% today because, well, Bloomberg reported early this morning that they are weighing the possibility of selling their business out there, and the markets responded positively to that news, up 8 percentage points here today. Then let's look at the one. This was a debut on the stocks earlier this year, rose up huge when it first started. Circle Internet is the stock we're going to look at here. It's an 8.97% down here today, right now. Basically, they're a stablecoin issuer. That's what they do when they became an IPO. They did post earnings and revenues that actually beat expectations. Well, why are they down 9 percentage points here? Well, it's just this internet stock has been, or this stock, stablecoin stock, has been taking a beating here since they became in the IPOs. Well, they reported, Circle did, that they account for 29% of the stablecoin market. So they have a big chunk of that market, right? Well, doesn't mean anything because over the last 3 months, Circle shares, if you want to look at the macro of it and pull that up, well, they're down 40% in the last 3 months overall. Circle Internet had a lot of hopes when it became an IPO earlier this year. Had some big growth early on and just down in negative stock since then. And now let's look at Sony here, right? You know Sony, gaming, movies, software, etc. Well, they're up today 3.72%. They said its tariff burden was going to likely equal about $324 million in operating profit for the year ending March. That's good news. That's a lot of money, but that's good news. Everybody thought the tariff hits would be really big, and a lot of companies were expecting billions of dollars. Sony expected a bigger exchange than this. Matter of fact, 30% more is what they expected. So they came in and said this $324 million number is 30% less than they previously expected. So how many other companies are going to have a lot less of a hit on their operating profit line due to these tariffs? Sony up 3.74% here today based off of that good news, tariff news there for Sony. And then let's get into a couple local stories here. These ones are going to be around utilities here today on this Wednesday. And if you remember, gosh, about a month ago or so, roughly 3 weeks ago, APS, Arizona Public Service, they announced that they would propose a subscription model for data centers. Because what they want to do is they want to basically prevent energy costs from being moved from these big data centers into residential customers. Because that's what's happening with APS and SRP right now. The data centers move in, power up, your price increases go up bigger as a residential user, even though you don't spend more money. Residential, small amount. What's driving the energy growth is the data centers. So APS came out with that about a month ago, 3 weeks, a month ago or so is what they want to do. They also announced that natural gas is set to supply most of the plant's power coming up here. So no coal, no solar. They're going to move towards natural gas pricing and using natural gas to power that stuff. APS currently estimates about 75% of the plan that they have will come from natural gas. They do say clean energy will be used as well. And it's funny when you look into natural gas, you're like, oh, that's a clean energy. Not as clean as you think it would be. Most potent greenhouse gas emissions will be produced to fulfill the data center demands. But they are getting away from coal, which is the dirty energy side, moving to natural gas. But natural gas does produce less carbon dioxide, which is good. But it actually emits more methane instead. It traps 28 more times more heat in the atmosphere than carbon dioxide does. So it's a trade-off between, coal and natural gas at this point. So it's interesting. And don't forget, last month, APS announced a 2,000 megawatt natural gas plant that's going to be built down there near Gila Bend. It's going to support all users, but we told you before, a large portion of it, majority of it, is going to be used specifically for the data centers. So these utilities, specifically APS, moving more towards natural gas. Not a surprise. We've talked about it a lot here. Environmentalists, of course, aren't happy about it. They'd like to see more green energy, more greener energy than natural gas. But I think everybody's happy they're moving away from coal, at least there. But again, does that mean less energy cost increases for us as residential people? Yeah, I'm skeptical on that side because we're going to pay for the increase in demand from these data centers that are being built. That's the APS side of things. And then let's talk a little bit of water with the utilities. The Valley has two large water providers, and now they're going to connect their systems out there. So what that's going to do is that's going to allow Salt River Project water into the Central Arizona Project's canal system when it's needed, etc., or if there's overflow on the SRP side. This project is going to give SRP and CAP the flexibility to move water through the valley. So if you want to combine the two here, right, and look at it from that perspective, the providers serve most of Arizonans between the two of them out there. SRP water comes from the Salt and Verde rivers. CAP water comes from the Colorado River. It's in danger of taking cuts. If you know anything about the Colorado River, up there outside of Las Vegas, the lake up there. We don't know. Our supply of that water is becoming less and less. It's going to become less in the next cycle as well. California takes a large amount, things of that perspective. So this is kind of like cutting it up, right? And hedging your bets here on that cut coming up. SRP and the CAP, they both have different service areas around the state, but they're the biggest supplier. So they're proposing an SRP CAP interconnection facility that they're calling a SCIF. That's going to allow water users, like some of those central Arizona cities and towns with rights to SRP water, to actually access it now. The SCIF proposal has been discussed for several years. SRP made its official proposal back in 2020. This project, even though they're talking more about it now and it looks like it's coming fruition, it's still in the early stages of preparation for it. So this is kind of how it's going to work. And the rare occurrence when SRP's reservoirs do go over capacity, major storms can lead to that, for instance, as well. Big snowpack in the wintertime, which it's been a while since that, but, can fill up those lakes there in the east side of the valley. Well, the SRP has had to release excess water into the waterways and basically put it to waste, right? Well, this whole SCIF program here would potentially be a way to use more of that excess water because they're going to add it to the CAP system. So, it doesn't mean that you won't waste water still by opening up the dams and flowing it down the rivers where it just goes where it goes. But it's not going to eliminate that, but it will allow CAP to use a lot more of the water that's an overflow side. Skiff will not expand SRP's service territory or even serve as a way to transition CAP users to SRP water. But interesting enough, it's going to allow municipalities to cash in on their water credit. So every municipality, Tempe, Avondale, Phoenix, Scottsdale, they earn long-term water storage credits, which means they have rights to certain amounts of water that comes in through these systems and everything. Basically, think of them as water rights out there. When the cities want to draw on those supplies, well, the water's drawn from the SRP wells specifically, instead of the CAP side of stuff. The water can only be delivered through the SRP system right now. So this is going to open up and allow CAP system to give those water credits to the cities as well. The problem, though, well, much of the water credits are meant for growth outside of SRP service area, which is a problem. So if you have, credits in Apache Junction, Queen Creek, Buckeye, well, you can't get the water because SRP doesn't service your area out there. So, a city like Phoenix, they could get its normal allocation of SRP water from wells rather than surface water, which they already do. That's a usual process there. But then SRP surface water will be diverted into the CAP canals, and then that would mean Phoenix would be able to withdraw the equivalent amount of CAP water out for itself to service somewhere outside of that SRP service area now, instead of now just not being able to get it there because no SRP delivery. So utilities making some preemptive moves here, getting ready for the future because the Colorado River raw water, we already have a low amount of it coming here. It's going to get less and less and less here, especially with the drought conditions up there and the dam systems. And so it's getting ahead of that and allowing water to be moved around a little bit more here in the valley. And folks, let's leave here today. It's lunchtime almost, and I'm a big pasta guy. I love me some Italian food. And here's the problem: if you like Italian pasta, brace yourselves here because as soon as early as January, of this year, U.S. tariff rates on imported pasta from 13 major Italian companies. Well, that tariff amount could go as high as 107%. And it's not being done because President Trump's arbitrarily putting that out there, folks. There's a reason for it separate. All right, this is a preliminary U.S. Commerce Department decision, is why we're looking at this 107% tariff number for consumers in the United States. That means the cost of Italian pasta could more than double if the brands decide to pass tariff costs on to us, the retail buyers. Exporters, though, say tariffs, well, basically will effectively bar the targeted Italian companies from selling any pasta here in the U.S. markets. That's where you could disappear or a higher price. The tariffs mean that exports of pasta to the U.S. would be virtually wiped out, according to the pasta, cartel out there, erasing years of growth and investment, along with entire supply chain, is what Italy's largest agricultural organizations are saying about this move here. So these 13 companies, you've heard of some of these companies if you're in the pasta game, Barilla, Molisana, Garofalo, and then Rummo as well. There's other ones, there's 13 total, but those are the big name ones that you find in your regular grocery stores here. So why is this a preliminary decision here? It was issued in September. And basically, 13 Italian pasta exporters got a tariff rate of 92% in September. So that would stock on top of the Trump administration's 15% blanket tariff on exports from the European Union. That's where you get the high tariff amount. Why are they doing that 92% to 94% tariff? Well, the Commerce Department, they allege that the pasta companies are dumping products in the U.S. What that means is they're bringing it into the U.S. less than normal value, kind of pushing out the American pasta makers and other pasta makers. They're bringing it in at lower pricing than they do at other places and what it should be at. So these additional tariffs, according to the Commerce Department, are necessary to level the playing field with American manufacturers. So the review of Italian pasta makers that resulted in these preliminary tariffs, that was launched back in August of 2024. So for those of you saying, oh, Trump, well, that was under the Biden administration, is when that investigation actually had started. So investigating Italian pasta companies for potential violations of anti-dumping rules, well, it's not a new thing that's been going on. The agency has been broadly monitoring that whole sector since 1996. Right, the repercussions of this review caught the industry by surprise, though, with these large tariffs amounts out there. So, Italian pasta fans, going to get awfully expensive. You've seen it get expensive here if they pass it along to consumers, and they might just not ship it here anymore as well. Of course, some of those are popular pasta brands that I see at my local fry store. When I shop there, I buy them as well. Something to pay attention to there, pasta lovers, and as we get to that side of things. And we appreciate you joining us here on the Wednesday edition, McCollum on Business. Glad to be back after a couple days off, one for a holiday, one for a personal day. We'll be back tomorrow and Friday getting you set up. When we come in tomorrow, well, we should have an end to the government shutdown. What does that mean for the stock market as well? When are we going to start seeing some government reports come out in terms of numbers, et cetera? Not going to be right away, but maybe we'll get some clarity on that over the next couple days as well when we'll get some of those labor reports, et cetera. So join us here, McCollum on Business. We'll get you all that news. Appreciate it very much. I'm Stephen McCollum. Have a great Wednesday night, everyone.